Back to the broader economy, we got retail sales, nice print today. People had varying thoughts on PPI, but for the most part, I wonder if you think, like Williams, for example, that any kind of cost pressures are still to come regarding tariffs.
Yeah, I do think it's pretty easy to make the argument that we know that we brought in more than $500 billion in tariffs. Where has that gone? Now, companies have a good deal of cushion to absorb that, more than $2.5 trillion in cash to absorb that, and that's outside of the tech sector. Free cash flow is there to absorb it. We also have more indications that some producers, external producers, have been absorbing some of the costs as well, like they did in 2019. So I think maybe we're thinking the worst fears around tariffs may be averted, but this is just the beginning of the price pressures coming through. More important for the Fed is, can you get consensus to look through the coming price pressures? It's a one-off level shift in prices. We know that growth is slowing quite a bit, and it's going to slow even more, and so we can go ahead and cut. But you mentioned retail sales. It's fine. I mean, the economy is not falling off a cliff. We've slowed this year. It's normal that we'd slow. Jobs are not falling off a cliff. People are still spending. People are going out to eat. That's the number one thing that tells you whether households feel good. And so it's hard if you're the chair to sit there and say, oh, my God, we need to cut. We need to cut. We need to cut now. He believes they should cut this year. The consensus on the Fed is they should cut this year. It's just a matter of timing.
So why do you think the urgency from the White House and from some of these who were auditioning for Fed chair?
No, I mean, certainly, if you believe that you want to juice the economy, then you don't just want the Fed to cut rates. You want them to cut enough to get into easing and stimulative territory. So even if the Fed cuts 25 basis points a year, 50 basis points this year, it's not going to be enough to stimulate the economy. That I would call right-sizing the level of rates for this slower economy that we're in, and we should do that.
Where do we think neutral is? Is it to be 2.5, 3? Where do you think that number is?
No, I think on a nominal neutral rate, I think it's higher. I think it's easy to argue that it's higher, and I think 3 to 3.5%. On a real neutral rate, that probably means somewhere around 1%. And so it is higher. So they don't need to cut as much to stimulate the economy, but 50 basis points isn't going to stimulate the economy. Do you think that's going to bring mortgage rates down so much that we kick off this massive wave of buying and housing?
Right.
No. But that doesn't mean you don't move on rates either, because you do need to calibrate rates constantly to the underlying dynamics of the economy.
Right. I think that does explain certainly the aggressive nature of Bill Pulte's social media posts. When you look at today, NAHB, prospective buyers index is new cycle low almost, right?
Yeah, but let me tell you what's even more important than mortgage rates for affordability. It's regulation. Can we please tackle regulation at the state and local level, which is where regulation is done in housing? Now, that's a longer term. Cyclically, all we can do really is try to bring more supply online and reduce mortgage rates. But that's still not going to take away one of the main reasons why home prices are elevated, and that's the regulatory environment.
Finally, I know you're watching CapEx. We had this big AI summit in Pennsylvania, and you have your eye, too, on some of the resources that you do need to make these things happen and keep happening, right?
Yeah.
Like water.
So, right, water. So we've got this great CapEx story going that the One Big Beautiful bill will also support with all of the incentives, but we can't lose sight of the fact that we keep talking about data centers and the need to build data centers. We can't run data centers without water, and we need more desalinization. Desalinization takes high pressure, and it takes energy. Everything comes back to energy. And so we're seeing some innovation in that space to be able to desalinate using less energy, less pressure, but that's something that we need to keep an eye on.